Are the stars aligning? Well, I'm not talking about the ones up there, but the ones a little closer to the ground. We're talking about emerging markets, and if things fall into place, is there a possibility that EM assets could perform well? With so many outliers right now, the question is timelier than ever. We'll get into the details right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thank you for joining me once again. And in the studio with me is Alejo Cherwanko, Chief Investment Officer for Emerging Markets here at UBS in our Chief Investment Office. Alejo, always good to have you back in the studio.
I'm so happy to be here.
So, with emerging markets, we can go into many different directions as many countries make up the EM space. But I thought maybe China might be a good place to start because for any of our viewers who've been paying attention, over the last couple of weeks, we saw that China released a massive stimulus package to some mixed reviews, and especially the markets there reacted probably differently than the Chinese government expected it would for reasons that I know you get into. Just give us kind of like the where we were and where we are with China right now.
Absolutely. A lot has been announced. If I could summarize it, Chinese policymakers are going to ease monetary policy, ease fiscal policy, and support the property sector that has been struggling for a number of years. I think what's relevant, Anthony, is the signaling the strength of these announcements is the most significant in many years coming out of China. So the initial market reaction was pretty strong. You saw a rally in Chinese assets. Then in terms of implementation, things have taken a little longer to come through. You've got the US election happening in the background. So for a number of reasons, the rally has lost some steam, but I do want to emphasize that this is very significant. The result, likely China will be able to meet its 5% real GDP growth target this year and will be able to continue growing at a relatively healthy clip of 4.5% to 5% next year. Think about it. Yeah. This is the second largest economy in the world. If China does well, the largest commodity consumer in the world, the largest manufacturer in the world, the rest of the emerging world can do well as well.
Right, and the rest of the emerging world, especially, and I know we'll talk about this in a moment, Mexico comes sort of second to China in the sense that if everything goes well, as you're talking about with that 5% target for GDP in China, it could kind of put Mexico a little bit on the back burner when it comes to the biggest business or trade ally with the U.S. I'm getting ahead of myself, Alejo. And interestingly, one thing I read in a report that you just wrote recently was that China, when releasing the stimulus package, the markets really didn't have a good time of it because there were a lot of investors who were short selling, which means they're betting on the markets going down. So as the markets were trying to go up, they couldn't cover their shorts. So it caused a little bit of volatility on the outset of the release of that stimulus package, right?
I think we need to remember China has not been the most loved market out there for a number of years now. So positioning is quite light. This announcement has the potential to make a significant impact on the valuation and performance of Chinese assets. And for some time it had. I think investors are waiting for a bit more detail on just how exactly are Chinese policymakers going to implement these measures to become maybe more consistently positive on the story.
Right. And you talked about the U.S. election, which is happening this week. We also have the Federal Reserve here in the U.S. in this rate cutting cycle. Our base case still here at UBS is for another 50 basis points before this year is over and possibly another 100 next year. How is that potentially impacting or could impact, especially countries like China and Mexico, which are two big trade partners of the United States?
That matters greatly, and for just about any emerging market economy, right? Think about it this way. When U.S. policy rates are 5.5%, it is very comfortable for global investors to just park their cash in U.S. Treasuries. Now, that is no longer the case. Policy rates have been coming down. Potentially, we'll see end policy rates in the U.S. in the vicinity of 3.5%. So now a number of investors are going to consider moving money away from the core and into the periphery, right? Money is more abundant. Flows move from the United States into the emerging markets. Also, Anthony, historically, what we've seen is whenever the U.S. cuts interest rates, emerging markets have done well.
And when you think about, you call it the stars aligning, which is kind of why we started the show with that metaphor. When you're thinking about stars aligning when it comes to EM assets, what do you mean by that? Is it the fact that that Goldilocks kind of scenario with Fed cutting rates, depending on the election outcome? I know that, as you talk about, if Donald Trump gets reelected, it could be really tough for emerging markets. If Kamala Harris gets elected, it's more status quo from the Biden administration. So give us your take on what it looks like if the stars would align in EM.
Of course, what I mean is, I think there's a lot going for emerging markets right now. Number one, China is easing aggressively, unlike it's done in many, many years. Number two, the Fed is finally cutting interest rates. Number three, hopefully soon, the US election will be behind us, right? Once we have that sort of certainty, I think we'll see a more clear picture in terms of the outlook for emerging market assets. Of course, a lot hinges on the concrete outcome of the US election.
Right.
We'll see what's going to happen with US-China, US-Mexico, overall tariff policy. But even if we see a Republican victory, this is not universally complicated for emerging markets. There are some countries, think India, think South Africa, to some extent Brazil, that are a little bit more insulated from external policy under a Republican presidency.
Right, right. And I guess, you know, if one of our base cases from our Election Watch publication, and our team there talks about what a red sweep might look like, and I think right now we have a 35% probability of that happening. What kind of impact could that potentially have on EM? Because, you know, Donald Trump is talking about putting flat tariffs across the board that are higher than the ones that Biden put on 2 years ago, 3 years ago.
Without a doubt, tariffs is a big deal for emerging markets. As you know, Anthony, as in any presidential race anywhere in the world, there tends to be a gap between what candidates say on the campaign trail and what candidates end up implementing once in office.
Right.
So we'll have to see once we're there.
Okay. Yeah, and you know, you mentioned the word uncertainty. That seems to be exactly where we are right now. A lot of that is going on, and markets don't like uncertainty, domestic or emerging or international. So I know that once we finally have an answer, we can then make the proper decisions, which sort of takes me to my last question for you, which is, should investors be doing anything now when it comes to specifically EM in their portfolio? Should they wait until we get an answer to who's going to be sitting in the White House? What's your thought there?
Most of our clients are persistently underallocated to emerging world assets. We think this is a mistake because it helps diversify portfolios, it helps enhance returns. Concretely, what should people do? You should consider bringing allocations to emerging market bonds to strategic levels. What does this mean? It's an asset class that is extremely well diversified, that offers yields in the ballpark of 6.5% to 7% in US dollars, which is quite appealing, and has a very solid track record of performance. Emerging market bonds denominated in US dollars.
Right.
In addition, emerging market equities. You can access the asset class at a 40% discount to US stocks on a price to earnings basis, right? This is equivalent to saying there's so much bad news already in the price of developing market assets. It wouldn't take much to reignite the asset class. If the stars end up aligning, you want to be prepared for that.
Yeah, yeah, and you know, we say it all the time. A diversified portfolio, and our advisors know this as well, certainly as a way to hedge against volatility potentially, and potentially against that the sort of uncertainty that we've been living in. And it sounds like right now EM assets are quite appealing, given, as you said, where rates are for EM debt, and then of course where we see that 40% discount on the equity side. Alejo, thank you very much. Always good to have you join us in the studio. There's always a lot to talk about in EM, and we only scratched the surface. There's a lot of other countries out there that I know you're doing consistent research on and your team is always working on, so we'll get you back in and talk about those sometime really soon. Maybe after the election when we have an answer to who's going to be sitting in the White House.
My pleasure.
Yeah.
It'd be great.
Thank you. Alejo Chawanko from the Chief Investment Office. Thank you very much, Alejo. And thank you all for joining us. There's a lot more information from Alejo and his team on the EM side here from our Chief Investment Office on our Insights website. The web address there on your screen, ubs.com/views. Plus, you can follow Alejo and all of us on social media. We're on all the major channels, including Instagram. Follow us at UBS Trending. Lots of content there for you to take a look at. And as always, as we say every time we do this show, make sure you're having conversations with your financial advisor, especially if you have questions about what Alejo and I spoke about today. Until next time, I'm Anthony Pastore. Have a great rest of your day. And remember to keep your eyes on what's trending. We'll see you soon.